This tutorial will be looking at the exclusive selling agency authority and how to complete this document. So item 1, the very first thing that you will be entering in is the vendor details. So the vendor being our client. So if that was going to be Bob Smith, I would enter Bob Smith's details. If this was going to be a business that we're selling, we would put in a business name, but if it's not applicable, we would simply leave it blank. Then we would follow on with the address of the vendor. So if this is an owner-occupied property, then the property that we're going to be looking at in part 3 and also in this section will be the same. So for the purpose of this exercise, let's assume that this is going to be 2 John Street, Coburg, Victoria, etc. Now, if the vendor was registered for GST, then ABN would be applicable. In our case, it's just a residential property, so we don't have to worry about that. Phone number, mobile, email address, pretty straightforward. The client will give these to you and you will enter them into the document. Again, if they're not registered for GST, then we would simply select no as the option. Agent details will typically be preset information by the agency that you work for. So in most cases, you're not going to need to fill this information in because that's already going to be there, especially the ABN. We won't want to be writing this information in time and time again because then there is a good chance that someone may get a digit wrong and then it becomes null and void. So the information will typically already be preset for you. Part 3 is the property that we are going to be looking at selling. So in our case, we're going to also have the property that we have listed up as Bob Smith's address as the property that he is selling. So we would simply write that in there. And the real property description will be the lot and the plan number. So we would typically get this from CoreLogic, RP Data, or a similar type of service, or from the certificate of title as well. So we would type the information in and make sure that we're selling the correct property address on the correct lot and plan number. Any included fittings, furnishing, or chattels. So anything that is a chattel is, if you imagine that you turn the house upside down and you shake it, anything that falls out would be a chattel. Things like pot plants, if they're going to be staying with the property, we would list those down, or any other sort of fittings or furnishings. Things like blinds, typically referred to as fixtures, and because they're fixed, they're deemed to be staying with the property unless they're going to be listed as an exclusion as part of the contract of sale. Part 3.3 asks, is the property to be sold subject to tenancy or vacant possession? So are we actually going to be selling this property with a tenant in place? In this case, it is owner occupied, there is no tenant, so we're going to be selling the property as vacant possession. Part 4, vendor sale price and settlement information. So note, vendor should obtain independent advice as to sale price. So what price do they actually want to list the property for sale at? So let's imagine that we're going to be listing it at $500,000. And if we're going to do this as a private treaty sale, then this information would also be displayed on any of our marketing materials that we use. And again, because we said that we are not going to be doing this as GST inclusive, it would be GST exempt. Vendor's preferred settlement date. So the settlement is the day that the ownership will transfer from the seller to the prospective buyer. And in this area, we're simply indicating the vendor's preference. So 30 days from date of contract, that would mean that if you've got any conditions that need to be met, that can be a pretty quick turnaround time, and so some owners may opt for a slightly longer time. So you might have something like 45 days from the time that the buyer and seller enter into a contract. Agent's estimate of selling price. So under section 47A of the Estate Agents Act 1980, The amount is an estimate, it's not a valuation. So if you are going to look at all of your research, as the agent, we would determine how much we think the property could sell for in the current market. So we could either set down our estimate of a single amount or a price between. If we're doing the price between an amount, we do have to make sure that that is no further apart than 10%. So before we said 500,000, so we might go and say that that is a price between 500,000 and our estimate might be up to 550,000, which is within the 10% allowable amounts. Term of exclusive authority. So exclusive period is when the agent is in full control, and when they enter into a contract of sale for a buyer and seller, they are then entitled to the commission exclusively. Sole agency can be when both the seller and the agent are able to sell the property, and the agent will only receive the commission if the sale is as a result of their actions. So if the vendor was to sell the property to a friend or relative and they found the buyer, then they would not have to, in that case, pay the commission to the agent. Part 7, ongoing authority period. So once that exclusive period is up, when is this authority going to cease? So we can put the amount of days. So you might go and have another 30 days that it continues for as an ongoing open authority, which does also mean that other agents are able to list the property at the same time. And if somebody else was to list it as an exclusive, then their authority will surpass the current authority. Any special instructions given by the vendor can be entered in Part 8.1. If there are no special instructions, we can simply write in there nil or something to that effect to indicate that there are no special instructions. 8.2, the agent is authorised to advertise the property for the following price. So again, it could be that we're going to use a price range, or it may be determined that you're going to list it at a price. And so you might go and have 550,000 that it's going to be advertised at, and then open to offers under a private treaty sale. Commission. So how much commission is the agent going to be receiving? The agent's commission is going to be calculated on one of the two methods below. In 9.1, it asks, what do we think that the property is going to sell for? Because this is what we're going to be basing the example on. So we might go and say that we expect it's going to sell for around 525,000, and that's including GST if applicable. So in our case, it's not applicable, so it's simply be 525,000. And then I've got one of two options that I can go ahead and utilize. So it could be either commission method, number one, where I can have a percentage, so I might say 3.3%, including GST, of the sale price. So I would simply write into this section 3.3%. Or I could say 3.3% on the first 200,000 and then plus another type of percentage on the balance. Or we could have a fixed amount. We could go and say we're going to charge $10,000 total inclusive GST. Or if you're going to create another type of way to be remunerated for the service, you would indicate it in other. Either way, whatever you specify in this area outlines what the entitlement to the agent is. And then in 9.3, we're going to do the commission calculation. So if we're going to estimate 525, we would go and say 525,000, multiply that by our 3% plus our GST, and our total being our 3.3% including GST. So we would do all of the calculations just to be transparent to the client so that they understand how much they're going to be having to pay to the agency once the sale is effected. Part 10 is expenses. So the vendor shall reimburse the agent for the following. So this is where all your advertising expenses would go, your certificate of title, anything that the client is paying for. So if this was going to be a strata title property and there was going to be a body corporate disclosure statement and the agency was going to make arrangements to get that on behalf of the client, then that would also be something that you could be reimbursed for. So you would itemize what the expense is, how much it is, and when it's payable. Good idea to always get things up front. So on listing is a good idea, because that means that we're not going to get to the end and the property doesn't sell and the client says, well, property's not sold, I don't want to pay this, and then we have to go and take the matter further. So always getting it on listing is best practice. Part 11 is whether or not the agent's going to be sharing their commission with anyone other than a licensed agent or agent's representative. So if no, then you just simply tick no. If yes, you would have to go to clause 2.18 to look at the implications. 12, make a complaint concerning commissions and or outgoings. So have to include this statement, which of course is already there as part of the document you're completing. Any special conditions? You've got an area there. Once again, special conditions is something that you would have the vendor discuss with their legal representative, and if they wanted to add this into the contract, their legal representative would write up the clauses for us to be able to insert it. So for the purpose of the exercise here, we're going to say that no, there are no other special clauses or conditions in here, so we just have it as NA. But if there were, we could simply go and write something like see Annexure A, and then we could attach the completed documentation from the solicitor to the back of this documentation to make it part of the contract. Item 14 is rebate statement. So this is if you're going to be receiving any sort of kickbacks, referral fees or rebates from a third party. So will the agent be receiving it or not? If you're not getting anything, then simply the first box, the agent will not be or is not likely, or if you are, then you would detail what it is. So if, for example, you are going to be referring the seller to an insurance company, and the insurance company is going to be paying you a referral fee for the business that you've provided, you would need to indicate that you are going to be getting the amount from that insurance company so that the client can make an informed decision about using that service. Item 15. The agent is authorised to receive notice of termination, so whether or not you want the notice or not, so yes or no. Item 16 is only going to be applicable to properties that are going to be sold at a market value of above $750,000. So if that's the case, you would have to ensure that either there is a clearance certificate or the buyer would have to withhold some monies before this clearance certificate is obtained. Or if it's not applicable, we would, in our case, select not applicable because we're only listing the property at $525,000 and it doesn't meet the threshold of $750,000. Again, GST withholding, you need to go and complete the notice if applicable. And the final area is item 18, which are the signatures. So anybody who is listed as a client above would need to be listed here and their signatures and the date. For the purpose of the exercise that you're going to be completing, it is sufficient for you to type in the names of the parties to give us an understanding that you understand that where the information would go, but you don't need to print these off and sign them as part of your assessment. If you wanted to obtain further understanding of each of the areas just discussed, you can go into the terms of authority and you can go and read through all of the different sections which relate back to the document, and it explains all of those terms that are used in that contractual document. Hopefully that's given you a better understanding of this document and how to complete it for the purpose of your assessment.